When you hear the name Warren Buffett, you probably picture a billionaire moving billions of dollars across the stock market. But the true secret to his multi-billion-dollar empire wasn't discovered on Wall Street. It was discovered in 1945 inside a small, local barber shop. Long before he was the Oracle of Omaha, Buffett was just a 15-year-old high school kid with an idea, a good friend, and $25. What he did with that $25 not only created his first real business, but it laid the exact foundation for how he would eventually conquer the financial world. Today I'm going to tell you the legendary Pinball Machine Story, and more importantly, I'm going to show you how you can take the exact same strategy a 15-year-old Buffett used and apply it to your own investments today to build real, generational wealth. The year is 1945, World War II is ending, and the American economy is shifting. Warren is a high school sophomore in Washington, D.C., and he's obsessed with making money. He's already tried delivering newspapers and selling golf balls, but he wants something bigger, a system. He teams up with his high school friend, Don Danley. Don is a mechanical genius. He can fix almost anything. Warren, on the other hand, is the numbers guy. Together, they pool their money and buy a broken, beat-up pinball machine for $25. Don fixes it up. But now they have a problem. Where do they put it? They can't just put it in a basement. It needs to generate cash. And this is where the teenage Warren Buffett shows his early genius for understanding human psychology and business. He looks around his neighborhood and notices the local barber shop. What happens at a barber shop? Men sit around. They wait. They read old magazines. They get bored. Warren approached the barber with an irresistible pitch. Rather than asking for rent or trying to sell the equipment outright, he proposed a completely risk-free partnership. He suggested installing the machine in the shop to keep waiting customers entertained, with the simple agreement that they would split the daily profits right down the middle. Realizing he had absolutely nothing to lose, the barber eagerly accepted the deal. On the very first evening, Warren and Don went back to the barbershop to check the coin box. Inside, they found $4 and nickels. Now, pause for a second. Imagine you are a kid in 1945. You just made $4 in one afternoon without lifting a finger. What do? Most kids would take that money, buy comic books, go to the movies, or buy milkshakes. But Buffett didn't see $4. He saw capital. He realized that the machine was doing the work for him. It was a cash-flowing asset. So, what did he do? He didn't spend a single cent of it. He and Don saved those nickels, week after week, until they had enough money to buy a second pinball machine. They took that second machine and put it in another barber shop. Now they had two machines printing money. Within weeks, those two machines generated enough cash to buy a third, then a fourth, then a fifth. Within months, they had a small empire of pinball machines spread across the city's barber shops. Warren was pulling in $50 a week, which, adjusted for inflation, was the equivalent of a full-time adult salary, all while he was sitting in his high school math class. A year later, in 1947, it was time for Warren to go to college. He and Don sold their little pinball empire to a war veteran. Remember their initial investment? $25. They sold the business for $1,200. In today's money, that's nearly $17,000. It's a charming story, right? But it's not just a story. What Warren Buffett did with those pinball machines is the exact same blueprint he used to build Berkshire Hathaway. It teaches us two massive lessons that you can use in your own financial journey today. Lesson number 1. Buy assets that produce cash, not things that consume it. The pinball machine wasn't a toy to Warren. It was an employee that worked 24 hours a day, 7 days a week, and never asked for a day off. Today, your pinball machine doesn't have to be a physical arcade game. It can be a dividend-paying stock. It can be a real estate investment trust. It can be an automated online business or a digital product. You need to acquire assets that drop nickels into your coin box while you sleep. Lesson number 2. And this is the most important one: reinvestment. The true magic of the pinball story isn't the first $4. It's the fact that Warren didn't spend the $4. This is the pure definition of compound interest. what Einstein famously called the eighth wonder of the world. In the modern stock market, this is called a DRIP, a dividend reinvestment plan. When a company pays you a dividend, you don't spend it. You automatically use it to buy fractional shares of that same company. Now, your new shares produce even more dividends, which buy even more shares. Over 10, 20, or 30 years, that small initial investment snowballs into a massive portfolio. Warren Buffett once said, "If you don't find a way to make money while you sleep, you will work until you die." That $25 pinball machine was his first lesson in making money while he slept. He took those profits, bought another machine, then another. And eventually, he graduated from pinball machines to buying insurance companies, railroads, and massive stakes in Apple and Coca-Cola. The numbers just got bigger, but the formula never changed. So I want to ask you, what is your $25 pinball machine? What small asset can you acquire today, let it generate cash, and reinvest the profits until it becomes an empire? Let me know in the comments below. If you found this story inspiring and want to learn more about the exact strategies the wealthiest investors use, subscribe to the channel. We'll be breaking down more of Warren Buffett's greatest lessons in the following videos. I'll see you in the next one.